Okay, Medicare calculations can be one of the more tricky as the individual reaches the additional Medicare threshold. So let's review the thresholds. Married filing jointly is $250,000. Married filing separately is just half of that, $125,000. And then single and head of household is both $200,000. So let's see how this works. Okay, so first off, Caleb Griffin's filing status is married filing jointly. So that limit is $250,000. So you would keep that in mind. And he has earned gross pay of $3,100. So what we want to know is how much of this $3,100 is subject to regular Medicare and how much of it is subject to additional Medicare. So each period he makes a 401 contribution of 7%. Now we remember that 401k contributions are not, they are taxable for Social Security and Medicare. Current taxable year. So we have taxable earnings of $3,100. Now, how much of that is going to be subject to regular Medicare? All of it is. $3,100. So take $3,100 and multiply that by 1.45%. And this is the easiest way I know to do this. 3,100 times 1.45% is going to be $44.95. Now this would represent a deduction from this employee's check and a tax that the employer is going to pay. Now the next part is maybe the trickier part, maybe not. But now we need to determine how much is going to be subject to the additional Medicare. So we know that the cap is $250,000. Let's subtract out the $248,400 that this individual has received up to this date, and we can see that's $1,600. So that $1,600 is not subject to the additional Medicare tax. It has already been made part of the $3,100 at 1.45%. So we take the difference of that, which is $1,500. The $1,500 is the $3,100 minus the $1,600 that's not subject to additional Medicare. And we multiply that by the 0.009. And then that is equal to $1,350. We add the total Medicare deduction from the employee above at 1.45%, and we add it to the $1,350 that we've just calculated as additional Medicare deduction that comes from the employee's check, and that's $58.45. So we would enter $58.45 here. All right, so that pretty much demonstrates how to do that. The only thing that can make these problems a little bit more complicated is when we have a deduction, a non-taxable deduction from the employee's Social Security and Medicare. So let's see if we can find one here. Number 2, again, let's see, he has earned income. Each period makes 403. That is not taxable. That is taxable for Social Security and Medicare. And contributes 2.5% of gross pay to Dependent Care Flexibility Plan. Okay, so he contributes 2.5%. So the taxable income in this case is $2,220 minus the 2.5% of the gross, which is $55.50, giving us $21,6450 as taxable wages for Social Security and Medicare. Now here, this is individual is filing head of household, and the threshold is, I'm sorry, we're up here, $2,200, and to date their wages are at 124,375. They're filing single. There is no additional Medicare, so this one would be just straight up all Medicare, 2164.50 times 0.0145, and that would be total of 3139. Okay, so I hope that helps. Make sure you're calculating your taxable wages before you determine how much Medicare is going to be calculated and deducted from the employee's check. And do remember that Medicare under the cap is deductible from the employee and is paid by the employer in an equal amount. And the additional Medicare is a deduction on the employee's check only.